Whether you believe in New Year's resolutions or not, now is a great time to consider fitness stocks for your portfolio in 2024. We have 3 stocks ready to rally in the new year, so let's dive in. All right, guys, this isn't just another basic same old New Year's resolution talk. We are taking a spin on things by talking today about how New Year's resolutions could potentially impact your investment decisions in 2024. So as fitness and health resolutions gain momentum here, it's certainly worth exploring how fitness-related stocks might fit into your portfolio, especially when you consider the evolving retail market landscape. So let's just dive right into it here. Let's touch on consumer spending first. What are the trends here and what are we going to be looking at for 2024?
So first of all, Lacey, thanks for having me back. The latest read on retail sales shows that against all odds and against a lot of conventional wisdom, the American consumer is still hanging strong. In fact, the report is that Americans are expected to spend more on gifts in 2023 than at any time this century. And that makes me feel real old to say this century, but we are about a quarter of the way through it. But, then again, nothing really about the last few years has gone exactly according to plan. So I don't know why this is necessarily that much of a surprise. As it relates to stocks, as I said in my article, consumer discretionary stocks seem to have hit a little bit of a dip in October that followed the market, but that may be the bottom. Earnings growth looks like it's ticking upward. Stock price growth follows earnings growth. So right now, this may be a good sector to be involved in.
Yeah, like Chris was saying, the consumer should be hurting really bad right now. Stimulus dollars are gone. Inflation is still running hot. Interest rates are the highest in decades, but it isn't. Consumers are still pretty strong. The last retail sales report was better than expected. Now, with the FOMC expected to cut rates in 2024, there's a chance for the discretionary names really to shine and to get some more momentum, have a reinvigorated tailwind. As it is, they are expected to post some of the strongest growth in 2024, so it is certainly a good spot to be looking for 2024 investment.
All right, well, thanks for giving us that background there. So let's dive into some specific names here. We're looking at Nike, Lululemon, and Skechers today. So I want to know why these companies among the others. So let's start with Nike. The stock saw a 27% rally in the last 3 months, but shares are still up only 4.3% for the year. So do you guys foresee anything changing with that?
The real story with Nike here is just the valuation. It trades around 32 times earnings, and that makes it sort of a premium stock, you would say. In the past, Nike's had no problem commanding that premium. It seems like this year, investors have been asking Nike to prove that a little bit more, even though their earnings reports have been very good. So I think it's a little bit like Apple in that regard. The good news is that analysts do believe that Nike is going to be one of the best performing, apparel stocks in 2024. And, I think that's being reflected in what you've seen in the price movement in the last few months.
Yeah, right. Nike has been able to sustain growth where other shoemakers and apparel stocks haven't been able to. So for me, this is a story of operational excellence. It includes the shift to direct to consumer. Consumer strength is certainly sustaining growth, and that DTC channel is helping to improve margin and sustain that growth. It's also about cash flow, the balance sheet, and the dividend. There's also the China growth angle. There's a lot going on for Nike, and I think that premium is there for a reason. Like Chris said, the market kind of wants to see proof in the pudding, but the premium is there for a reason. I think Nike's going to live up to it in 2024.
All right, great insights there. So then there's Lululemon. It's a shining star among retail stocks for many years now, and it continues to open brick and mortar stores. I think the store count is somewhere around 686 last time I checked. But that also accounts for the 14 stores that were opened in the most recent quarter alone. So not only are physical locations serving them well right now, they of course are attracting customers with their e-commerce presence. So what are the key things to note about this company that might support investor confidence here?
Well, I think you actually just really nailed it, Lucy. That's really it. I mean, Lululemon is sort of I'm not going to say it's the opposite of Nike, but it's similar to Nike. This is a
Mhm.
valuation story. Lulu is trading at around 41, 42 times earnings. At least it was the last time I checked. And they're having absolutely no problem getting investors paying that premium for all the reasons you just said. Uh, they continue to build stores, new locations, but they've also got a really strong online presence as well. Their products command premium prices, which means premium margins. And right now, consumers are having little issue paying that. They just even announced a $1 billion share buyback program in the last quarter. If there's one thing you could quibble at maybe a little bit, is you could say the free cash flow is down in 2023 as opposed to 2022. But that's nothing that I think investors need to be concerned about. The company doesn't have a cash flow problem.
Yeah, to me, Lulu was a lot like Nike and also like Apple,
Yeah.
because it's a lifestyle product. It commands a loyal following. People that like Lulu are going to stick with Lulu. Other people that are into that kind of chic fitness apparel lifestyle will move into Lulu. Speaking to your comment about store growth, just the other day, my wife was surprised to see that we have a Lulu near our house. And I'm like, you shouldn't be, because Biltmore Village is a premium shopping destination. You can tell that by the other names that are in that location, such as Williams Sonoma. So Lulu was focusing on that premium destination shopping, but also on direct to consumer. I think with Nike, with Lulu, the valuation is there for a reason. The company is growing, it's providing solid cash flow. The buyback is evidence of the cash flow. Moving forward, I think Lulu is a growth story that is switching to a cash flow and capital return story. And those two things should help sustain the stock price and stock price increases over the next couple of years.
They really are a growth story. I just think about, they have these brick and mortar stores, but I even see like the yoga studio that I attend, they have a small little like nook that's a boutique for Lulu. So they have all these ambassadors, which isn't counted in that store count. So like they really are just, spreading their name out there with even giving those discounts to nurses and teachers, that kind of thing. It really is a whole universe of that. So
Honestly, you could call it a penetration story more than a growth
there you
story.
go.
The market is there. It's just how they get their product out to all these people that really want to have it.
Mhm. All right, let's bring Nike back into the conversation quickly, because the next company that we're going to talk about is Skechers. And in contrast to Nike, Skechers is outpacing the market in 2023. So the stock is up 48% here. However, there's potential expectations of a pullback in the near future. So I want to know, how is this stock? How have they managed to stand out in the market despite that?
Yeah, there's a good marketing story here. I mean, in the last few years, Skechers has really become the cool kid, I would say. And I bring that up because of my kids, because my kids actually would probably talk more about Skechers as opposed to maybe a Nike. Now, my son might still talk about Nike and stuff and Air Jordans and different things like that, but by and large, Skechers has become the cool kid brand.
They're
And
making a comeback from the Skechers shape ups, is what you're telling me, because that wasn't the
Yeah.
cool kid brand.
Right.
exactly. And that's being
Skechers is coming kind of to me like alongside of Vans as being like, it's not just a trendy fashion product anymore, but it's more of a mainstream fashion
right.
product, right?
Mhm.
Right. And the stocks had a great year. It's up about 48%. You're right, Lacey. It's up so much, it may pull back a little bit. That wouldn't be, that wouldn't be unusual here. And right now, that presents investors with an opportunity. If you haven't been in the stock, that pullback may present an opportunity for you to get in on it.
So are there any upcoming factors here that might drive the stock performance higher in 2024?
The most immediate one for me is the company reports earnings in January. And if the numbers come in as they're expected to, I would expect analysts to start upgrading the stock. And with those upgrades will come, stock price growth.
Mhm.
Yeah, exactly. The analysts have been lifting their price targets and sentiment all year, helped by the fact that Skechers is actually outgrowing Nike. They're growing
Yeah.
faster than Nike. Another solid report should reinvigorate the bulls. Some key developments this year include the widening margin and inventory corrections that have it in lean operational condition and set up for leveraged profits later in the year.
All right, of course, I have to ask this question. If you're only investing in one of these stocks, which would it be and why? To our viewers, let us know. Respond to this as well in the comments. We'd love to hear your thoughts. All right, Chris, start. Nike, Lululemon, or Skechers?
Well, my daughters wish that I bought them clothes from here, but I would say, and that actually would be cheaper than buying them a share of the stock, but I would say Lululemon. And for a lot of the reasons that we talked about, this is a company that commands premium prices, but they get that, and the margins are great. There's not a lot not to like about this. It's a lifestyle brand. It's going to continue to grow. It's worth the premium price now, and it's going to command that premium price in the future.
Thomas, what about you?
Right. So I view these companies kind of on par with each other as far as brand and growth. But I'm going to go with Skechers because over the past few years, it's had some game-changing developments. It's on track for solid growth and share gains, but it also trades at a value compared to Nike and Lulu. So in the world where like these premium companies command premium pricing, I think Skechers could see a price multiple expansion on top of its growth, which could help really boost returns.
All right, well, we are gearing up for the new year here, and we're staying on top of these evolving dynamics that fitness trends and retail stocks are presenting. So stay tuned as we track these stocks right here at Market Beat. Thanks for joining me, guys. We'll talk soon.